Hi and welcome to the Market Alert for Monday, the 18th of January 2020. So on Friday, stocks euro plunge as Pfizer says EU vaccines will be delayed. And probably due in part as well to the fact that it took them a while to actually approve it compared to the UK. So this had an impact on stocks on Friday and also, as stated here, on the euro, allowing the dollar to rise and the precious metals to be pushed south. Also, something that's of interest at the moment, seemed to dominate the news on Friday. When will the window of Euphoria close, i.e. this 12-year bull market, where it's continued to rally since 2008. Well, actually, we're in the 13th year now. And as it says here, totally nuts is the new normal. And again, it's not referring to what's happening with the lockups, etc., but with the market. It all changed in 2008 when the Fed just came in and protected everything. As it says here, the Fed is in a fantastic position where the more it fails, the more it is needed. That's absolutely true. The stimulus packages that this has released over the last 13 years is inconceivable, and every single one has failed. They've not turned anything around. They're not allowed to even consider putting interest rates up because of the damage that they've done. This includes all central banks. And the more we go down this road, the more it is going to fail. And as Goldman points out, the alarm on stocks, when euphoria is this high, it is a good time to reduce risk. And they show this in this small graph here in full details in the article. And you can see there, when you get to these sorts of levels, that there are corrections in the market. And this is borne out with the implied volatility as well, which we see it moved higher slightly on Friday, from 817 to 834 because of the decline in stocks. It's not going to take a lot to actually send this moving sharply higher at all. And in the color-coded version, we're still green, but we're getting close to breaching that 20-bar moving average again once more. Now, today is a holiday in the US. It's Martin Luther King Day. And you will see from this that we're closed across the board. I thought it was just government bonds, but it's not. It's everything. And all equities are closed, which includes the Dow and the S&P. So the market's got to make its own direction, which generally is to the upside. And news for today as well. Well, there's just obviously the main news of the Martin Luther King Day holiday for the US, and Bailey is going to speak at 1:30. Notice that it's been downgraded to a medium impact news item, which is odd. It which should be read, in my opinion. Any central banker is a high impact news item. Okay, let's have a look at the markets, see what is going on. We'll start with the DAX. You can see on Friday the market trading down to the 20-bar moving average. We took out the 89 and all the other areas as well. You'll see what the 1304 discussed in part 2 when the market traded to this level, how it reacted, where I take apart the details of what happened. I'm just going to remove all of these. It's a new week, and those other ones are not relevant. So I'm going to go from here, because this is the next low to the left that stands out by itself before the market reversed and moved higher. And from here, just to see where we are in the bigger picture. It's very important. So you can see at the moment we're down at the market coming down to 78% there. So I'm just going to delete all of these other areas and keep this pair of fibs intact here. Now, what I can do as well here is, just in case we get a rally, because the market's got nobody selling into it today, given that it's a holiday in the US. So from this high down to this low that's been left behind, we will just draw this in as well. And there we can see we've got a selection of fibs as the market is likely to move back to the upside. But also note that we've got the 5-bar moving average at the 38% as well. So that's 13,848. It's easier just to round the numbers up if you can, and then you can see them at the BRNs inside the smaller time frames. That's what I tend to do. So the upside is going to be 13,850. We'll just say 850 to make things a bit easier. and that's 100 points away from this line here. This looks like 750 it is. So overnight prices now back above the 200 MA there. Let's squash everything down a bit so we can see where we are. So overnight prices have traded sideways. They're below the DP, they're below the 200 in the early hours, and we see that eventually prices moving back above the 200. It's got Friday's close in the way, the DP level in the way, and this is the 804, the black line there that we looked at earlier in the daily chart as well. This needs to be taken out as well. And then you've got your 38%, which I'm going to just drag that line up there. It's around about there. That's the spot on there, 48. That's where you're going to get the 38% retracement in the daily chart, which are very important, as you can see on Friday. If you'd been short on this market at 78 and below the 20, you know the market's likely to find support in these areas, good profit-taking areas for a longer trade. So the market here is currently trying to get back above the 200 MA at the moment. We've got the futures kicking off at 7 a.m. Let's have a quick look at the Dow. This one is going to be closed today, but the electronic session will continue with the spread betters. And again, the same thing here really, just on the upside from Thursday's high to Friday's low. I'll just draw these in, and there we've got the fibs on the way back. Notice that the 62 now ties in with the 5-bar moving average there as well. So an interesting area should prices move back to the upside, currently trading at 30,800-ish area. So you can see there back to 62. Not too much of a distance to actually put on a few points to get back to there at all. A couple of hundred points, and you'll be at that sort of area, I think. Let's have a look. Yeah, it's around about that. Okay, so that's more or less it for the first part. Say it's a holiday today for the US, so the market's got to make its own direction. Generally, that's to the upside, but there is the odd occasion when prices actually fall apart. So hopefully it's the former as opposed to the latter, and we get a move back to the upside to these areas of resistance and support. I mean, the high is quite some distance away. That's 250 points away. So Friday's high, 250 points away at the moment, and there'll be the same. Let's have a look. No, it won't be the same for the downside because we're already 50 points below the DP. So down to the low, we've got 100 points. So 250 up, 100 down to the previous day's low. Otherwise, we get an inside bar. Okay, that will do it for part one. And if you're switching off at this point, as ever, thanks for watching. And I will see you in tomorrow's. But otherwise, if not, I will see you in part two. Okay, so in part two, let's have a look and see what the market did on Friday. Of course, it had moved lower in the overnight market. And then as soon as the futures market opened, they started to buy, and they brought the market back up to the 200 MA and also to the support that you can see here of one of the fibs from the 38% retracement there. So the market had to get above the low, and so let's fast forward, and you'll see prices starting to trade aggressively, moving towards the upside. As I say, if they can get the market up, they will get the market up, whatever means it takes in order to do this. So prices drive through the low and then hit the BRN and the first profit target there. And then just watch the volume. This is really important because as soon as we get to this level, you can see that prices are showing some selling pressure. The range of this bar is less than the previous bar's range, so there's some sell limit orders sitting around this area for sure. That's why you're seeing this. But the market attempts again, and you can see that the volume is also significantly high in this bar, just slightly lower than the bar that drove up to begin with. So again, we've got some selling pressure in this area, and it was at this point I thought, let's see if we're going to get a retracement, and I'll take the money off the table at this point, because you can always get back in. It's not a problem. You will get retracements, as you're seeing now. prices trade sideways there with the volume starting to drop off. And what I've done here is drawn in some fibs now just to see where the market is likely to find some sort of support. And I can see down at 78 I've got the 200 MA and also the 38% retracement area there. So prices continue to come back. You can see them trying to jump off the 50% area there, and you'll see prices just trading sideways, moving back up towards the high, and you'll see in a second we just come back once more, and then we get a nice bar here. You'll see the volume in this bar at the 50%. You'll see this bar here is the one. You can see it's an increase in volume just below the average bar, but it's again more or less the same as the previous bar, but this one isn't going down, it's reverse. So we can see them picking up the buy orders at the 50% retracement, and also where you've got the buying in this side as well, where the market's moved up to a 78% retracement in this area before retesting, and a double bottom in this area too. So prices managed to get back above the low, and then again straight away the market runs into difficulty. There's no interest. The market is then brought back, and we start to see the retracement coming in. Now what I've done here is gone back and had a look at the daily chart just to see what we've got on the downside should prices move lower. Also can see that we're also back at the 5-bar moving average there. So let's move forward. There were no other trades during this session, so what I'm doing here is just showing you what actually happened. We're now back to the low here because we had some buying there as we did here. Just wanted to see if the market would break this. The market comes through, goes down to towards the 200, and then just gets into a sideways move. You can see prices coming back there. The 200 now becoming a support for this market, and once again the buy signal's not filled. We go back to the 200, and you can see how important it is to have these levels and averages on the price chart. So again, we've got a bit of buying coming back in. They try and move the market lower, and then they reverse it off the 200 MA, and then prices just end up trading in a sideways range, again waiting for Biden's inauguration this next Wednesday. So that's the morning session. Very, very quiet. Meanwhile, in the afternoon session, the market again, what I've done here is gone down to the recent low because prices had moved lower during the mid-morning. Typical, sat there for 2 hours and then decided it wanted to move after. They then try and bring the market back to the upside, which is what you're seeing there at the moment. So let's just see this move forward. You can see there's some selling around here. It starts in this bar and this bar here, failing to close above the 20-bar moving average. So the real test is going to come when prices drop down to the low that we marked up in the daily chart at 13,809. It was 804 was the figure. That's right. So there you can see that potential weakness. They then sell down, and then they start to put the brakes on at this level. And this is why it's so important to actually draw these into the charts. And you can see them buy back. Again, you've got this classic. You've got buying pressure. We've got some testing here. But also you can see that this volume is greater than the previous bars, and it's actually moved towards the upside there. So we'll see prices try and rebound for a bit. You can see the sideways there. And then some news hit the markets. It's a shame we didn't get filled here because we had a sell signal there where the market came back. And then once we got past the 3 bars, it disappeared. And then you see the selling coming in here with the close back below the 5 and the 20 bar. And the rest, as they say, is history as the market moved lower. And this is the 1308 I was talking about in the daily chart. So prices then moving sharply lower, as you can see there, the brakes being put on, and further selling coming into the market, and then you get this reversal. These are great bars. These are. You can just see how the market stops with these. You just say, okay, well, we're taking our profits at this area, and the key for this after is to see if the market can actually hold and build up some sort of climatic volume, but it doesn't on this occasion. And the trick is to actually look at the 5-bar moving average, because that's what the measure of momentum is. Prices close back below this. You see, tiny bar, about 70% of the volume from the previous bar. So they'd run the market up, taken profits, and then there's obviously some sell orders at this BRN, where they then move the market back to the downside, as you'll see there, and then head down towards the BRN. So that's how a continuation of the trend. Even though they're trying to buy back in at these points here, you can see the increase in volume. They try and put the brakes on, but they fail, and then we see them go through the BRN, and then the selling starts to drop off. And again, an interesting bar here, because you've got more volume in this bar than the previous bar on the downside. This bar here, this one, you can see that the selling had dropped off from the previous selling bar, and then you get this reversal, and then you'll see prices retest this area in a moment. You see them going back up there, trying to hold a lot of pressure at this level. You then see a spike down just to test, see if anybody else still wants to sell, and there they don't want to sell anymore. And you've also got a fib retracement there of around 50% before prices then decide they want to move high. But again, look how this volume just sticks out at this level. So you've got a bit of selling pressure in here, that disappears, but they say before we can move the market to the upside, we need to know if anybody else wants to sell. So they move the market below the BRN, nobody else wants to add to the selling there, and then the market is free to move back towards the upside. It's just drifting really, because the range of the bars are really narrow. So market makers just playing the market there. And that's how it stays until the market switches off at 4 for us, but 4:30 for the main market. Okay, that's it for today. Keep in mind that all the government bonds, etc., are closed today in observation of the Martin Luther King Day celebrations. And then on Wednesday, of course, we've got the inauguration of Uncle Joe. So with that, as ever, thanks for watching. See you in the next one.